Jon, welcome to the Building and Growing podcast. We're delighted to have you here today.
Hi, Lucas. Thanks for having me. Glad
Most
to be
welcome.
here.
Jon is the CEO of Finder UK. So thank you so much for joining us today, Jon. I know you've been working in the digital arena for a very long time. Can you tell us about your story and how you came to Finder?
Sure, makes me sound terribly old. But let's wind it back to 1997. And I'd actually just graduated from an engineering degree. I was sponsored by Ministry of Defence at uni and went into my first job, which was military intelligence.
Wow.
Which was fun. Interesting budgets and interesting work. And do you know Spooks, that old TV show?
Yeah. I remember it, yeah.
I was like the really geeky guy with a computer behind the scenes. That was me. I wasn't the cool guy with a gun. I was like the way at the computer.
Oh, far out. But they're a very important guy, I think.
And I guess we had like classified intranets.
Yes.
Back then, and that's sort of how I got into like HTML and what was going on with the internet in general. And I actually built a website back then for my wife's company she was working at.
Yes.
Just as like at the weekend, a little bit of side money, a little project as a fresh grad. And then got into that, and then actually went backpacking.
Okay.
Went to Australia and New Zealand.
Great choices.
Very very nice times. And took me like 15 years to come back.
Yeah.
So I ended up starting a number of businesses down there.
Okay.
And in the digital arena, so in digital marketing and development and those sorts of companies. And and I guess things evolved. And then eventually did come back to the UK eventually with a couple of kids that I had down there.
Fantastic.
And got into Finder.
That's incredible. I mean, starting off in military intelligence, I'm sure it was a different time back then in 97 compared to now. But we won't dive too much into that. But a lovely entrance into the world of the internet, particularly as it was taking off, and great that you got to spend time out in Australia and New Zealand. So you came back to the UK. How did you get involved in launching Finder in the UK?
Yeah, it was a funny story. So I came back in 2014, and I actually set up a digital marketing agency here before Finder for some guys I knew in Australia.
Okay.
Did that for a couple of years, and then we sold that business.
Yes.
And then Fred, who's one of the founders of Finder, gave me a call and asked me, would you like to launch Finder in the UK? So Finder is the leading comparison site in Australia.
Yes.
And I guess we've been on, or the guys had been on a bit of a global expansion at that stage. So they launched into the US the year before. And Fred and Frank, the founders, knew me from back in 2007 when I'd sold my digital marketing agency to the same Australian business that they'd sold their digital web development business to.
Yes.
So we'd worked together for maybe a year during our earnouts back in 2007.
Okay.
And at the same time, Fred had started this blog.
Yes.
Like a credit card student blog back in the day. And that was the seed that turned into Finder, which is now 400 plus people around the world and in 20 plus countries.
That's incredible.
So we knew each other, which Fred gave me his trust to launch here, and the rest is history.
Yeah, indeed. And look, very, very interesting how a transaction in 2007 then led to you launching Finder in the UK. You mentioned trust there. It'd be really good to explore how millions of people in the UK are using Finder in order to help them make complex decisions. So how do you scale trust to all of those people?
It's a very, very good point. And I think, this day and age, you have to be authentic. Mm-hmm. I think people see through just marketing spin and that sort of thing straight away. So people are looking for authentic, trusted sources of information.
Yes.
And I guess that comes from our values. Mm-hmm. So I think by having strong values as a company and then having sort of structures that come from those. So, empowering people is one of our values
Yes.
that both internally and externally that we really live by, and we have very very strong editorial team, and it's sort of a bit of a church and state.
Yes.
So you have the independence of the editorial team, which are 100% objective, and then we have our more commercial team,
Yes.
which deals with the fintechs and the providers that we might promote on across the website.
Okay.
But we definitely have sort of a full market approach.
Yes.
So we want to review in any one sector, if that's digital banking or if it's share trading, we want to review every provider
Yes.
in the UK objectively, provide that information for people to find and use. And then, that builds an audience, it builds trust. And then, transparently, we do work with those providers to help, bring them to an audience and explain what they're doing and
Yes.
why they're better at this and these guys are better at that, and really finding the right customers for the right provider and the right provider for the right customers. So it's sort of good balance.
Yeah, fantastic. And you've sort of alluded to some of those agreements that you might have with, let's say those fintechs. Are you able to provide members of the audience, I'll say, for example, my parents, who might be listening, a bit of background or context as to what types of agreements they might be? How do fintechs and Finder engage in commercial relationships?
Yeah, so all of our relationships are pretty much on a performance basis. So this means we only get paid if we deliver some sort of valuable action to the provider, to the fintech. And that just makes it an easier decision for them to work with us because it's sort of shared risk. We're not just going to take their money and then not deliver anything. So we might get paid when someone clicks on a link, a bit like Google gets paid when you click on one of those links at the top of Google. Google charges its advertisers a cost for every click.
Yes.
So some of our deals might be like that. We might work with providers where if we get paid when they acquire a new customer that we refer to them. So we don't get paid for the click. But then if that customer likes what they see and they sign up and they transact with that business, if it's an insurance business or if it's a share trading business or a digital bank, then we would get paid a fee for that new customer.
Yes.
And those are the typical models. There's other models like revenue share,
yes,
where we get a percentage of the customer's transactions if they're trading. So different types of model for different types of advertiser, just making it really easy for providers to work with us.
Okay.
And that's how we pay for the free content because the site's all free.
Yes.
So and having some of the providers working more closely with us.
Yes.
Then that's how we can afford to hire all the writers and reviewers and editors that produce all the great content.
Yeah, fantastic. Thanks so much for that. And look, many fintechs use Finder as a key distribution channel. Are you able to sort of talk about the ways that you supported them throughout the recent fintech boom? You've alluded to different ways that you partner with them, in a commercial way, but are there other ways that you support the fintechs?
I guess we support them by educating, the general public and the audience about the product. Might be generically about the product, like buy now, pay later. It's a new product. No one, when it was launched, no one really understood what it was.
Yes.
So there's, so we take on that sort of independent education. It's like when you should use it, when you shouldn't use it, what you should look out for, how it works,
yes,
the pitfalls, the benefits. So very objective editorial about just the new product class. And fintechs are normally in a new line of business. They're trying to disrupt the market. So, they know what they do.
Yes.
But explaining that to others in a way that's digestible is, I guess, where we spend a lot of time.
Yes.
And then once we provided that information to our audience, you get down to the individual products. And so that's where traditional comparison comes in. So if there's fees, how do those fees compare to other providers?
Yes.
And making that kind of comparison objective. But we also do sort of like best buy. Our editorial team, we'll have like 200 criteria and we'll go through all of the providers in a particular category.
Yes.
And then we'll rate them for different things. So some products are better for beginners, like simple, easy to use, nice UX,
Mm-hmm.
but they might not have all the advanced features.
Yes.
And then some products might be great for experts or, for the next stage, but they're not very easy to use if you're new to that category.
Yes.
So we tend to have those sort of best buys for different types of people based on what they're looking for, so they can find the best product.
Okay, fantastic. And certainly myself, when browsing the website, I've seen, different categories there, particularly, let's say with business bank accounts, I know that, you've got particular criteria around, let's say, if they're sending money overseas or, in the personal finance section, the types of products people are looking for. So it's great that, you guys have got them categorized.
Yeah, they often all look the same on the surface.
Yes.
And then it's only when you really get into a category, you really understand there are actual big differences between companies that could look like they're offering the same product.
Yes.
And it's really us doing all the hard work, because you don't want to go out and test like 10 different
That's
banks,
right.
to see which one works best for you. So that's what we do for you.
Exactly. That would take a lot of time. And also, one of the other things which always surprises me is just how many different companies exist, even within some niche categories.
Yeah, some categories very quickly get quite crowded.
Yes.
Ultimately there'll be a consolidation phase. Some will make it, some won't make it, and those sorts of things. But we've definitely noticed that over the years in a lot of these new categories. All the ones we've mentioned. Business banking becoming very crowded, very competitive.
Yes.
Digital banking. Crypto, forex trading. All these categories that get full quite quickly, and then eventually there'll be some consolidations, and the best ones will kind of bubble to the top.
Yes, absolutely. And I think we're seeing that now, particularly, let's say, in the fintech space. There were a lot of providers out there, particularly sort of pre-COVID, but I think there's been a bit of a flattening out of the market.
Yeah, I think there's, just with, the market's changed a lot. As you alluded to earlier, we had COVID, and we had what was quite what you wouldn't expect, in that actually a lot of people had more dispensable income.
Yes.
And more time.
Yes.
Because they were in lockdown, they weren't paying for the tube, they weren't paying to commute, and they actually had this extra cash, and that's a lot of that went into people getting into share trading.
Mm-hmm.
And married up the same time as these more user friendly, like the kind of Robin Hoods in the US, and then the kind of the free trades and ETOs and OIGs all here, offering those products, and that was one of the big booms. Obviously the crypto boom as well.
Yes,
it kind of happened at the same time, stirred up by Reddit and a lot of speculative investing.
Wall Street bets.
Yeah, Wall Street bets. So that was huge. So there was a lot of that very strange activity, and I guess we obviously spend a lot of time educating, and it's great to have some play money. Yes. And play around with some meme stocks, or meme coins, whatever you want to do. That's fine if you don't mind losing the money. That's awesome. But I guess we found it introduced, especially a younger audience, into investing. And they might have lost some money on Dogecoin. Hopefully, only a little bit of pocket money, but it got them into thinking about investing.
Yes.
And I think that's really important. It's then you can have conversations around their pension, and if don't opt out of your auto enrollment pension scheme, and how much that would cost you over a lifetime if you did do that. So, it gets them in the game, gets them thinking more about those sort of products and making their money work for them. Mm-hmm. And I think that's the journey that we want to take our members on, is help them out with their first purchase, but then educate and show them, give them other options and more options as they kind of develop.
Yeah, absolutely. And I think 2 points I'll touch upon from that. The first one is because you mentioned pensions, and that's not something that gets enough, let's say, airtime. I know that previously being a trustee director of a pension scheme myself, member engagement is a huge challenge for them. So the fact that Finder is able to nudge people towards that when they might be looking at a credit card or an investment is fantastic. The second point that I'd like to elaborate on, and it's the one that you mentioned earlier, was about consumer behavior during the pandemic. You mentioned that people had more time due to the lockdowns, and also more money, more disposable income, let's say, as a result of reduced spending. Fast forward a couple of years, we're now
changed.
That's right, and it's almost the opposite on fast forward and steroids. So we've got a high inflationary market, which is reducing, let's say, people's effective disposable income because of the price of goods. And we're also seeing people return to the office, and so they may have less time. In the current market, what sort of changes in consumer behaviour are you seeing?
Yeah, it has been a full 360, hasn't it, or 180, I should say. And yeah, so we have seen people obviously concerned about maybe their mortgages.
Yes.
Yeah, obviously with interest rates going up, and there's probably a little bit more to go on that.
Yes.
So that's been a big concern for people, and we've certainly seen lots of people, researching if they can get a better rate or fixing rates, so there's a bit less volatility down the road. So that's been a big thing. Personal credit had demand for that. I think it's just gone back to pre-pandemic levels. Actually dropped off a lot again because no one was spending money on holidays and those sorts of things. And so new cars, you can't even buy a new car because of the supply issues. So there was a lot of people paying down debt, and a lot of people weren't taking on debt. Obviously with the cost of living, and people commuting and people starting to get back into things, there's putting more strain on the cash flow.
Yes,
and certainly we've seen levels which were quite high credit levels were quite high, probably too high, and they've kind of returned to those levels. So obviously people are trying to find the best credit option for them, and there's lots of different products these days as well, which and some of them are more complex than others.
Yes.
But it's certainly worth understanding all your options and which providers, and then also your credit score and how that impacts onto the deal you can get.
Yes.
So that's one of the challenges that people might find, is getting access to the best products can be quite difficult if you don't have a long credit history.
Yes.
And that's especially affects younger people that probably have more strain on their disposable income.
Yeah.
They find it harder to get a good credit deal and often get shortchanged. So helping consumers on that path and finding the best possible outcomes is sort of what we're focused on at the moment.
Yeah, absolutely. And I think very good points on mortgages and how the increase in interest rates will affect the amounts of money that people need to repay, and credit. Just diving slightly away from things, you mentioned credit scoring, and I think it's a very interesting piece because lower income individuals who you refer to, let's say somebody who's just leaving uni or at uni, they might not be making mortgage payments on a house, they might be paying rent. And I know there have been a couple of providers that have entered the market previously that say, look, we're going to use rent payments as a credit scoring tool.
Yep.
You've been in this industry, around the fintech industry for a while. Do you see improvements in terms of credit scoring methods here in the UK, or do you think overseas markets are doing it better?
I think the UK is doing a pretty good job, but it takes time.
Yes.
So I was talking to a lot of the open banking, powered affordability kind of scoring of consumers, and lenders have been taking that data for a couple of years now.
Yes.
And part of they weren't necessarily giving any better rates back 2 years ago, but the idea is that by collecting that data and feeding it into their models, they need time to see if it works. If those models actually work in reality, because the credit score is very well proven, and where they're risk averse, they're going to rely on that. But it does really help thin files. So that's people that don't have credit products, that don't have a history of paying off debt.
Yes.
And so for those individuals, most of them are probably good investments. They're either very employable, they've got very employable skills. They just haven't used credit before. Often because either they're new to the country or they're just young. So a lot of credit providers don't want to turn away a big percentage of potential customers, but they do have responsibilities on affordability, and they need to make sure that they're checking all the boxes. So open banking has been helping in that regard. I think we'll see an acceleration, and that was one of the benefits over COVID, is there was a massive uptake in consumers connecting bank accounts to different types of open banking services, and so there is a lot more data around now. And a lot more learnings, and so I think we will see, we probably won't notice this, like just the percentages will just widen as far as how many people now can get accepted for credit products, but probably quite timely with cost of living. So yeah, hopefully that works out for some people.
Yeah, absolutely. And I think the fintechs or the lending providers using open banking will hopefully then be able to monitor, let's say, their percentage of non-performing loans or debt which they forecast not to be repaid in a much more real-time manner now with that data. I know certainly from the business banking side of things, during COVID, the banks didn't necessarily have a real-time view over which businesses were going to be affected. Whereas if you had that data through open banking, you would see, which businesses have maintained or, let's say they were a toilet paper company, increased the amount of revenue they were bringing in. So, yeah, very, very interesting. So we've spoken a little bit about the inflationary market and the effect that would have on the let's say credit side and mortgages side. Are you able to talk a little bit about how that might affect people going to Finder and looking for investments?
Yeah, we've certainly seen, people looking at different investment options.
Yes.
Obviously, it was very simple. A couple of years ago, on everything was going up to the right.
Yes.
But with the collapse of the pound in recent days,
yes, yeah,
that makes investing in the US quite risky on your exchange rate exposure.
Yes.
And obviously the markets now have been on a downward trend for a little while, and no one's super confident.
Yes.
Obviously crypto's kind of followed suit. With the on-risk kind of assets and has crashed out a little bit, and how long that's going to be, crypto winter number 2, how long that will last for is a big question mark, and that was one of the go-tos. So it's there's a lot of buy the dip sort of thing, but most people don't time the market. So
yes.
it's like
it's difficult to do so.
Otherwise dollar cost averaging, so just put a little in it every month over a long period of time, and you tend on average to perform better than trying to pick the market, unless you're spending an awful lot of time and have a lot of knowledge of the area that you're investing in.
Yes.
But yeah, there's lots of other investment options, commodities, so gold and those sorts of things are obviously always popular when there's uncertainty.
Yes.
And then I guess new asset classes, alternative investment things are sort of popping up.
Yeah,
they've been around for a while, but there's a lot of interest in them.
Yes, yeah, I saw that there was a company called Mintus, which does fractionalized artwork, and Finder has now opened up a page for investing in art. I know Mintus is the only provider on there at the moment, but did you see demand from, let's say, the audiences that you serve for alternative asset classes like art, like gold, which has led Finder to start to publish pages on alternatives?
Yeah, I think Mintus is a good example of an alternative investment. There's been a few around. There's like whiskey and Mintus with art.
Yes.
And it's really interesting. No one's going to go and buy a $5 million dollar painting themselves, but
Yes.
I think there's a lot of interest in how technology could help democratize investment. Obviously that was only available to the 1%ers
Yes.
in the past, and that's been a lot of the movement over the last 2 years, has been making investments open to a wider audience.
Yes, indeed.
So and I guess the way we work is we're very much audience driven, which is maybe differentiates Finder from some other sites out there which maybe are more traditionally owned.
Yes.
And more traditionally focused on just current accounts and car insurance products, and very, very traditional.
Yes.
Where we do a lot of crypto content, we do a lot of alternative finance content now.
Yes.
So, and that's all based on trends. So
Yes.
Google will tell us what's trending.
Yes.
So you don't need to go far to find out what people are searching for, and I guess it's our job to help do the research for them. So
Indeed.
if people are looking for alternate asset classes, well, we're like, oh well, okay, so what are the different options?
Yes.
How would you compare your options?
Yes.
Should you put it into crypto, or you should put it into US stocks, or FTSE 100, or fine art, or whiskey?
Yes.
Like, what's appropriate for yourself and for your portfolio, and you want to try some new things out and spread some things out. So yeah, so really interesting space. If you're dealing with a significant amount of money, then or significant to you, definitely take some independent financial advice. Capital's always at risk with investments, but I think we just provide accessible, easy to digest information about options.
Yes,
and then our audience and our members can kind of review that and make their own sort of decisions for what works for them.
In terms of, you mentioned there are other sites out there as well, but I want to really focus on Finder and the traffic that it generates and how it serves the UK market. So when it comes to your traffic, where do you source that from and how do you build it up?
Yeah, so I guess we got I'd say maybe 3 sources of traffic. So we obviously, my background is in digital marketing, and these days that means, Google and Facebook, they own a lot of the internet, and that's, I guess, the point of origination. So when people are on, YouTube these days as well. So when people are either on Google or they're on YouTube and they're actually searching to, they're thinking about something and they're trying to research and they're searching, then we want to be found. And we can be found there by the content we produce, which is tens of thousands of pages of reviews and comparisons and analysis. And so, that you'll find that on Google or Bing organically. We also produce videos as well, which is, definitely with my kids is a preference as far as absorbing information in video format rather than reading.
That's right.
So and especially with smartphones and stuff, it's just a massive channel for us. So that's really building our own audience.
Yes.
We've got a YouTube channel and we've got experts that talk about different aspects of finance on there, which also links to kind of our written articles and our comparison tools. So they all kind of work together.
Okay.
So we originate a lot from Google and people like that. We build our own audience of subscribers to our Money Tips newsletter, to our video channel, and people will come back to that. And then we also have membership on the site as well, which is free, of course, where you can get your credit score. So if you're interested in getting a mortgage or credit card or personal loan, then you need to know that. So you can do that. And then there's other kind of exclusive member benefits as well that we use to sort of engage and with an audience and build that sort of relationship. So we get that repeat business, and then we can tell them about new products and new things that are coming along in the marketplace.
Indeed. I hadn't realized that you have a members section as well. So definitely something that I've learned, and I'm sure the audience will have learnt as well, that we can take away from today.
Great.
Excellent. So look, Jon, thank you so much for providing all of that overview of Finder. How you're building trust across the market with consumers, helping them to make difficult decisions. You're also helping fintechs to access the market by explaining what they do in a very objective manner and simplifying it for consumers so that they're able to choose products that best represent, let's say, their personas. Are there any tips or takeaways that you'd like to provide, founders and operators in the market based upon your experience as the CEO of Finder UK or as a previous founder? Maybe I could throw a few out there. I think the first one is to engage and talk. Yes.
So you don't get to talk to Google that much. They just take the money and send you some clicks.
Yes.
I think obviously we work with a lot of providers. We run technology driven business ourselves.
Yes.
So just talking, catching up, human to human, it can be a great way of exploring. Well, we're a publisher. This is what we need.
Yes. You're
fintech. And this is your part of the curve where you are, what stage you're at, and what you need, and just having that conversation, I think is super valuable for both parties, and just being as open and as frank. We've been around and would have heard it all and worked with companies in lots of different circumstances. You might have a massive VC backer, or you might be bootstrapping it, with your own money. So. We work with the whole spectrum, and so I think that's good to have that. Obviously, testing is an important thing as well. Just get some real world data.
Yes, indeed.
There's a stage where you have to stop kind of assuming what your model is going to look like, and you just need to get out there and actually get some real life customers signed up, see if you can get them to come back, what the metrics look like. So I think, getting out there and getting real life campaigns out and testing is you're going to learn like 10 times. And there's only so much you can learn in planning, and you just need to be in market.
Forecasts, can be very sophisticated, but until the market provides its reaction, you really don't know whether it's going to fly or not.
Exactly, and be customer focused.
Yes,
that's that's the most important thing, especially with fintechs, because a lot of it's word of mouth.
Yes.
So you do need to be investing in the product and investing in the user experience.
Yeah.
And that's how you're going to be able to get that model to work.
Yeah, absolutely. The word of mouth point really resonates, because somebody asked me the other day what Revolut's viral factor was, and I couldn't tell you the number, but certainly I think it was they only started doing paid marketing at around 3 million customers or so. Which is an extremely good viral factor, whatever it was.
Yeah, no, definitely. Yeah, I mean, there's definitely some value proposition that Revolut's good example. There was the product. There was a lot of money spent on the product.
Yes.
Which I would say is, well, that's marketing, because that was millions and millions of dollars of product and probably fee subsidies.
Yes.
Which was very, very smart.
Yes.
And I think a lot of people came and followed on and copied that exact model of it, exchange rate subsidies and those sorts of things.
Indeed.
And that's a bit like Robinhood and low cost trading or free share trading. And it's a good sell.
Yes,
but
indeed.
Once you've got them in, that only gets them in.
That's right.
And at that point, you then actually have to impress them enough that they're going to tell 5 people. You got to get this new app or this new service.
That's right.
And I think that works for customers that we deliver through Finder. Is we'll access a different segment of the market. But you want to multiply that investment by getting referrals, and so I think that's sort of, it's well understood, hard to do.
Yeah, it's hard to do. And then the other piece beyond referrals is cross-selling the client across different products, or penetrating them across different services.
Again, sounds easy.
Yes.
I think a lot of time it comes down to relevancy. And I think then that's when we work with our audience, and we interview Finder members that come back to the website and find out why they come to Finder, what they enjoyed, what they didn't like, and actually talking to the customers in those customer interviews.
Yes.
I think any fintech, that's an awesome source of insight, because you can end up in your own bubble and you're talking to yourself, but why not talk to your customers?
Absolutely.
And and you'll be amazed sometimes some of the insights you get from a real person.
Yes,
rather than the product team.
That's very, very true. So John, thank you for those insights. Number one, have conversations with different partners. Number two, follow the data. Do tests, and be data driven. And number three, really get to know the customer. If these are the secrets to find a UK success, then I'm sure everybody should really have a think about them, because you've done a fantastic job of scaling it to where it is.
Thanks, Lucas. Appreciate that.
No worries. Thank you so much for joining us today.
Thanks for having us.
Excellent. Thanks, John.